shares of Beyond Meat heating up today. The stock soaring more than 12% after Bank of America said this could be the next target in the Reddit rebellion. The bank noting an uptick in mentions on Reddit's Wallstreetbets board. Cramer also pointed Beyond's 22% short interest. Beyond is now up 14% this year.
Beyond Meat is up nearly 29% since May 9th, 2021, and nearly 14.5% year to date. Is it going to the moon, or is it just a meme stock joining the ranks of AMC and GameStop? Welcome to MGA Investing. My name is Dee, and in this short video, you'll get an introduction to Beyond Meat Incorporated, its stock analysis and overview, and explore the question of whether or not Beyond Meat is a meme or legitimate stock worth considering for your stock portfolio. Now, Jim Cramer of CNBC Mad Money pleaded for the Reddit crowd to consider putting Beyond Meat in their target last week. But because Cramer likes it, should you put it in your stock portfolio? But what exactly is a meme stock? Meme stocks are stocks that are heavily shorted by hedge funds or institutional investors for the sole purpose of making money, that catch the eye of Reddit forum retail investors like Wallstreetbets, that create chatter on the forum, that encourage hordes of buyers to begin buying the stock rapidly and unexpectedly to run up the value of the stock and catch the short sellers in a short squeeze. So for the uninitiated, let me explain short selling as simply as possible. The idea of shorting a stock, or sometimes referred to as short selling, is where speculative investors borrow shares from a broker that he or she believes will go down in value in the future for some known reason. The act of borrowing shares is actually called margin. And anytime you're borrowing assets from a financial institution, there are fees associated, and for the borrower, there's usually margin interest due. This is the cost to borrow. Also, there are possible trade commissions and other fees involved. Now, the investor then turns around and sells the borrowed shares into the open market at current prices, betting that the stock is destined to go down sometime in the future. The investor can hold the margin position as long as they want, or at least until the original owner it was borrowed from wants to sell it. And if the original owner of the stock wants to sell it before it goes down in price, the broker can call those shares in from the investor. If the broker can find additional shares to lend to the investor, preferably ETB, which simply means easy to buy, the investor can continue to borrow shares without additional fees. Now, if the shares are HTB, hard to buy, then the investor will be required to pay a fee to continue to borrow the shares. Here's an example. Let's assume Laura believes Krypton Energy shares are way overvalued because she believes the company, assisted by its accounting firm, has allowed it to book revenue from huge energy derivative contracts at their gross value, not their net value as is done with other security transactions. In addition, she thinks through a sleight of accounting, Krypton Energy is selling the same goods over and over to multiple customers. So she believes the price of the stock is bound to tank as soon as the SEC finds out. To keep the math simple and easier to follow, in this example, we'll assume Laura, a hedge fund manager, contacts a broker that is willing to allow her to borrow 100 shares of Krypton Energy at $10 per share on margin. Usually this requires her to keep anywhere between 25% to 50% of the value of the purchase in her margin account as collateral, pay margin interest and possible brokerage transaction fees. Laura then turns around and sells 100 shares she just bought in margin back to the market at $10 per share and puts $1,000 from the sale in her holding account. She then waits for the price to drop, and after several months it does. It drops to $5 per share. Laura then goes to the stock market and uses the $500 of the $1,000 she got when she sold the stock to now buy 100 shares of Krypton Energy for $5 a share. She then returns the 100 shares of Krypton stock back to the broker and pockets $500 for her efforts. So as long as the price goes down, Laura makes money. If the stock goes up and goes up significantly anywhere in the time frame that Laura is holding the Krypton Energy shares, she is caught in a short squeeze. A short squeeze happens when the price of the stock held by those shorting the stock suddenly increases unexpectedly as a significant amount of investors start buying the stock to push the stock price up. This causes the squeeze. If the squeeze happens for an extended period of time, the short seller decides to manage their losses and sells their current position in the stock to cut their losses. This year, we've seen this play out in GameStop, which is currently selling for over $200 a share, and then AMC, and now possibly Beyond Meat. Short selling is said to bring no real value to the market other than being an effective generator of cash for hedge fund managers and some institutional investors. Some opponents of short selling say it deteriorates company value. Now, I'm not entirely sure about the short selling destroying company value unless we want to propose that buyers of stock actually create value. What buyers can do, however, is provide good businesses the money and time to incubate in an idea when the current market paradigm opposes a paradigm shift in order to maintain the status quo. Case in point, Amazon and Tesla. Two companies that if stock buyers had not given them a longer runway, irrespective of Wall Street's constant berating in their early years, they may have not even developed into what they are or could be. The EV market would be nowhere near what it is now turning out to be without investors' willingness to go against the Wall Street grain and go long on Tesla, even while the stock was constantly being shorted and the analysts disseminating bad news about Tesla. Do you think Ford, Chevy, Chrysler would have made the move to EV without Tesla? Yeah, maybe so, but it would have been 15 to 25 years from now. How do I know? Well, look at all the dates of the corporation's plan to move to renewables. These dates are pushed out to 2040, not because it will take them that long, but because they're in no rush. There is no incentive to move faster. Anyway, back to Beyond Meat. Beyond Meat Incorporated, formerly known as Savage River, was founded in 2009 and changed its name to Beyond Meat Incorporated, September of 2018, and is headquartered in El Segundo, California. The founder, president, and CEO founder is Ethan Brown. Now, they sell plant-based products in the United States and internationally. It operates under the following names: Beyond Meat, Beyond Burger, Beyond Sausage, Beyond Breakfast Sausage, Beyond Chicken, Beyond Fried Chicken, Beyond Meatball, the Cape Steer logo, Go Beyond, Eat What You Love, the Cookout Classic, the Frontier of Protein, and the Future of Protein, Beyond Meat and Design trademark. The company sells its products through grocery stores, mass merchandisers, club, convenience stores, natural retail channels, restaurants, food service outlets, and schools, as well as through e-commerce. In this once very niche market that is now becoming mainstream, Beyond Meat, in the midst of COVID-19 pandemic, has grown revenues 37% year over year, doubling sales of the prior year. But can Beyond Meat compete in the $1.4 trillion global meat market? Although it grew its revenues year over year, it had a net loss of over $52 million, much higher than the prior year. So, should you hop on this rocket to try and ride it to the moon? I believe fundamentals within a realm of reason should always prevail when investing. The global meat substitute sector is estimated to be worth some $20.7 billion and projected to grow to $23.2 billion by 2024, according to a report obtained by CNBC from the Euromonitor back in December 2020. There's no question the demand for meat substitutes continue to rise due to animal welfare concerns, human health, climate change, and constraints on natural resources, and animal welfare sustainability. And although interest in growing this market continues, it will not be without its challenges of taste, defeating eating norms and expectations, and marketing, as Beyond Meat may fall victim to the same challenge that almond milk, a plant-based milk substitute, faced once it started gaining popularity. The milk lobbying group made it unlawful for almond milk producers to market the beverage as milk. Today, the word milk has been removed from almond beverage cartons and is now known as almond, although the consumer still refers to it as almond milk. It is possible that the same thing may eventually happen to Beyond Meat products. We'll have to wait and see. In the next series of videos, I'll be doing one of the most comprehensive stock analysis of Beyond Meat using the D.U.M.M method, a simple, repeatable, and replicable process of evaluating a stock without all the math. No need for advanced spreadsheets or technical chart reading skills. If you haven't seen my previous in-depth series on Teladoc, I would encourage you to go to the MGA Investing channel page and review that series. What is the D.U.M.M method? It's a method of stock analysis that I've used for the last 2 decades successfully. And I'm going to use it in this video analysis to determine if Beyond Meat is a possible buy for me. D.U.M.M is an acronym. D stands for Durable Competitive Advantage. This measures the strength of a company to fight off its competition and deliver sustainable returns. U stands for understand, meaning do I understand how the company makes money? Now, because if I don't know how it makes money, how do I properly evaluate revenues? M, which is M1, stands for management. It uses 5 metrics to evaluate management effectiveness. M2 stands for margin of safety. It looks for the best opportunity to consider purchasing the stock. Be sure to watch the second video in this 5-video comprehensive review of Beyond Meat, where I discuss whether or not Beyond Meat has a durable competitive advantage in the marketplace, and if so, what is it? If you found value in this video, give us a thumbs up and subscribe to make sure you're the first to view each of the 5 videos in this Beyond Meat comprehensive stock analysis. Thanks for watching. I'll catch you in the next video.